How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 to my Vanguard brokerage account. Now, we are certainly back on the come up today. My account rose by $866.83 since my last video, bringing my account total to $87,958.23 in the day. Now, investors across the board are bracing for impact on the Federal Reserve's decision to raise interest rates. We can expect them to do so by 0.5 percentage point, with such expectations giving way for the Dow Jones to rise by 0.22%, the S&P by 0.26%, and the Nasdaq having advanced by 0.15%. With that said, I want to keep you all updated with what I've personally been doing and doubling down on 6 high-quality dividend stocks for my personal portfolio. Spent a little over $2,400 in the past couple of days here. A video you're not going to want to miss out on. Before we get going, tap on that thumbs up button and help me grow this channel. And if you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. Now, I'm sure I don't need to tell you all, but it has certainly been a heck of a handful of trading days with all of this fear lingering in the market, creating a ton of volatility. But as I always say, it should all be embraced if you are a long-term value investor, as quality stocks tend to go on sale at this time, which is exactly what led me to a bit of a buying spree. And to kick us off, the first stock I want to talk about is the world's most valuable company. Let's talk about Apple, ticker symbol AAPL, which I couldn't resist in buying more shares as the market shook. Apple's share price dropped from $165 to $153, which is about a 7.2% change, and overall it was already down from weeks and months worth of falling from their 52-week high at $182. Now, Apple, in my opinion, is one of the safest tech investments that you can make. Its market capitalization sitting at $2.58 trillion and hardly ever letting up in regards to impressive earnings. Speaking of which, they just topped analyst expectations, coming in at $97.3 billion worth of revenue, from iPhone sales to Mac, iPad, wearable, and service sales, all up year over year. However, I'm most excited when it comes to their future with virtual reality, a headset due to come out in 2023, as well as that Apple Car, and building a lot of excitement, especially with their recent announcement of a long-term Ford executive joining the Apple team for the project. And if that isn't exciting enough for you, Warren Buffett even doubled down on his investment with $600 million worth of more shares. Now, he only continues to admit that he didn't even buy enough. As for me, I scooped up 3 more shares worth of Apple, averaging $157.64 a share, and bringing my portfolio count to 105 shares worth of Apple. Optimistically looking ahead at analyst expectations as well, coming in at a median stock share price at $191 per share and a high stock share price at $219.94 a share. Now, I'm only going to continue to collect on Apple's dividend until it reaches those high stock share prices, with their dividend yield at 0.56%. And while on the topic of the world's most valuable company, let's jump into the healthcare industry and talk about Johnson & Johnson, ticker symbol J&J, which is the world's leader in healthcare when it comes to medical devices, pharmaceuticals, and healthcare consumer goods, with over 130 years worth of revolutionizing the healthcare industry and a current market capitalization sitting at $469.15 billion. If you've been following along in my journey, you'll know Johnson & Johnson is a stock that is currently in focus as I grow my position to 100 total shares. It dipped below $180, which is why I picked up 2 more shares worth of Johnson & Johnson, totaling $359.68, bringing my total share count to 40 shares worth of Johnson & Johnson. Now, as they roll out their consumer goods segment, their new CEO speaks a big game on ensuring another transformative decade ahead. Analysts are excited, coming in at a median stock share price of $188.50 a share and a high stock share price at $215 a share. Not to mention, we'll get to collect on Johnson & Johnson's steady dividend at 2.35% of a dividend yield. Next up, I want to talk about Starbucks, ticker symbol SBUX, which is the world's largest coffee house chain that has built quite an empire with over 33,000 locations and operating in 80 countries after its founding not too long ago in 1971. Starbucks has been under a lot of heat lately, from inflationary pressures to battling unionization and leadership change, which ultimately led to the suspension in their share buybacks and honestly spooked a lot of investors, causing their stock share price to tumble down from their 52-week high of $126, where it's now sitting around $73 per share. That is a 42% drop, and with their PE ratio sitting at 20.05, this may just be the perfect time to invest in such an iconic chain, which is exactly what I did, picking up 3 more shares at an average buy-in price at $74.38. bringing my share count up to 17 total shares worth of Starbucks in my portfolio. Now, they recently beat analyst expectations, bringing in $7.64 billion worth of revenue, stronger than ever customer reward program, and a focus on their grab-and-go stores. Analysts are only projecting a rebound and continued growth, coming in at a median stock share price at $105 per share and a high stock share price at $130 per share. Now, until it reaches those prices, we as dividend investors can collect on Starbucks' dividend with a 2.6% dividend yield. As for the next two purchases, both were REITs, real estate investment trusts, which are exceptional investments for high inflationary periods, which tend to offer higher yields, better value, and more profitability. The first REIT I scored was with Realty Income, ticker symbol O. It is a REIT that focuses on freestanding single-tenant commercial properties across the United States, Puerto Rico, Spain, and the United Kingdom. Since their founding in 1969, they have amassed a portfolio of over 11,000 properties with clients in over 60 industries, totaling 1,040 clients altogether. So talk about reliability, you can certainly find it in Realty Income. They have a current market capitalization sitting at $40.46 billion, and growth is only expected to continue to come their way, with analysts projecting a median stock share price of $77 per share and a high stock share price at $86 per share. So as Realty Income fell below $70, I picked up one more share for $68.63, bringing my total share count at Realty Income to 101 total shares. Now, I'm just going to continue to enjoy the dividends from Realty Income with their current dividend yield at 4.27%, paying that dividend out on a monthly basis. And as for the second REIT, we're going to be talking about Stag Industrial, ticker symbol STAG, which is the REIT I am currently more focused on growing my position with. It has been a powerhouse of an investment since their founding more recently in 2010, as they already made quite the name for themselves. Stag Industrial focuses on single-tenant industrial properties like warehouses and distribution centers. They've secured clients like FedEx and Amazon, and they've managed to grow their portfolio to approximately 544 buildings across the United States to ultimately generate a market capitalization sitting at $6.63 billion. Now, as volatility shook the market, Stag Industrial stock slipped by another 5%, falling to $36 per share. So I picked up two more shares of Stag Industrial for $73.40, bringing my total share count up to 28 shares. However, I'm excited for the future, considering the fact that we are heading more and more in the direction of an e-commerce fulfillment future, which is why Stag Industrial is only going to continue to experience exponential growth, with analysts currently foreseeing a median stock share price at $47 per share and a high stock share price upwards at $55 per share. But of course, as a Stag Industrial investor, you're going to benefit from their dividend as well, coming with a dividend yield of 3.91%. And finally, just to stick to the fail-safe strategy that I deploy every bout of volatility, I doubled down on Vanguard's Total Stock Market Index Fund, ticker symbol of VTI, which allows an investor to ultimately invest in over 4,000 stocks ranging from small, mid, and large caps, with a mixture of both growth and value investments in there. Throughout the past handful of days, I picked up 6 more shares totaling $1,259.99, bringing my share count of VTI to 51 total shares. Only 49 more to go until I reach my goal of 100 total shares worth of this index fund. Now, YouTube, that is it from Apple, Johnson & Johnson, Starbucks, Realty Income, Stag Industrial, and the entire market by investing into Vanguard's Total Stock Market Index Fund. I spent a whopping $2,460.58 and will only be buying more if the market continues to spiral. Now, if you like what you heard, you learned something new, have any of these positions within your portfolio, or you're planning on investing into them, I would certainly love to know, but I'd also love to know if you have been buying anything as of recent, or if you've been refraining from doing so. Drop all those comments below. I'd love to read through them. Before we get going, do me a massive favor in tapping on that thumbs up button. It certainly helps me out in growing this channel. Now do yourself a massive favor in subscribing to the channel if you haven't done so already. Yeah, don't worry, I'll wait. And that I appreciate. Now YouTube, until the next video, I will see you all there.